I'm Joe Vitale, Vitale Wealth Management, here with this week's Gradient Investments Market Update. All information is gathered as of the week of January 27th, 2025. Let's get into the week in review. The week was positive last week for all major U.S. indices. The S&P returned 1.76%. The Dow Jones was up 2.19%, and the NASDAQ was up 1.65%. International developed markets stood out with a weekly return of 3.17%, which is the first time we've seen a really good increase that really beat domestic. On the bond side, the U.S. aggregate bond index was up 0.11 for the week. All major U.S. indices climbed for the second week in a row. The S&P set another record high on Thursday. And based on Friday's survey release, U.S. consumer sentiment weakened in January for the first time in 6 months. In commodities, the price of crude oil fell more than 3% last week after rising for 4 consecutive weeks. Gives you a little bit about what's going on. Now, upcoming economic release. It's been a busy week for the economic calendar. Wednesday, which is today, the Fed's first meeting for the 2025 concludes with an interest rate decision. We'll see what happens with that this week. It's expected that interest rates will remain unchanged. They're not going to, people would love to see a drop, but there's a lot of going back and forth of that. So fourth quarter GDP data will be released on Thursday, providing insight into the economy's performance during the final months of 2024. And the personal consumption expenditures, the PCE report, will come out Friday, and the Fed's preferred inflation gauge will be published. This metric will be closely watched for clues about inflation trends and potential future policy adjustments. Economic outlook, the market outlook, with 16% of the S&P 500 companies have already been reported their earnings. Early results have exceeded expectations, prompting a rise in forecasted earnings growth. Net income growth is now projected at 12.7% year over year, which, if achieved, would represent the highest quarterly earnings growth rate in 3 years. It's a big week for large cap tech earnings, with Microsoft, Meta, Apple reporting as well, which could set the tone for market sentiment for the week. So we're seeing a lot of the Mag 7 reporting, just a couple more left to go this week. Already, I mean, everybody's a little bit exceeding expectations. There were no changes for the gradient investment portfolios last week. There was no rebalancing in those. Those pretty much stayed the same. Stock in the news, Netflix, which is in the G33 portfolio, reported better than expected earnings last week. They added 19 million new subscribers during the last quarter, bringing the total to more than 300 million subscribers. Shares were up 13.9% for the week. Procter & Gamble, which is in the Core Select and the G50 holding portfolios, reported an earning beat last week, noting that the customers brought more household staples, and the stock ended up 1.9% for the week. So we're seeing a little bit more to staples. So we're keeping an eye on what's going to happen this week with more of the earnings report. Remember, earnings drive the market. So if we have good corporate earnings, that's only going to be better for the market, which is better for your retirement. We're better for your 401, for your IRAs. It's all better for the market. So we're going to keep an eye on that. Really interested to see what's going to happen this year. But remember, we're trying to make sure that we have income coming in at all times. So regardless of what happens in the market, you've got your safe bucket of money coming in. So that's it for this week. Thank you so much for being part of the Vitale Wealth family. If you'd like to get a hold of us, 855-756-5700. Visit us at vitalewealth.com. God bless you. We'll see you again next week.